Good evening and welcome to Biz in Focus. On behalf of the Newsfirst team, I'm Zinat Musafir. Joining us this evening is the Chief Economist at the Ceylon Chamber of Commerce, Shiran Fernando. Good evening, Shiran.
Good evening. Good to be here, Zinat.
So, Shiran, starting off with the latest developments in the international arena and global trade, there are ongoing tensions between the USA and China. So, how will these tensions impact Sri Lanka and its economy?
Yeah, so globally, as you mentioned, I think there is a lot that's going on with the US-China trade spat. I think now it's developing to much more than that. Initially, it was, both sides sort of putting tariffs, higher tariffs on certain duties, and now it's escalating to a point where even China is now, the currency is also weakened, and just yesterday, I think the US president labeled China as a currency manipulator as well, which is something that he was sort of mentioning in his campaign trail a few years back, and now he's finally sort of come out against that. But I think overall the concern here is that there was expectation, at least last week, that some degree of this trade spat will be resolved, and at least the technocrats or the negotiators on both sides will come to some sort of common consensus, but it doesn't look like it. So I think it's a bit of a concern not only for the two countries, but for the associated value chains that plug into it, both from a US point of view and from a China point of view. And given the interlinkages between trade between the two countries, and Sri Lanka is also positioning within the two countries, it's quite interesting, because if you look at it from one side, the US economy, it has been growing over the last few years, but has been seeing a bit of a slowdown. So that's why you've sort of seen the US Federal Reserve now cutting interest rates, moving from a period of raising interest rates over the last few years because of this concern over a slowdown. The worry is now, if this trade tension continues and the ripple effects impact the manufacturing sector or some of the other sectors in the US economy, will there be further slowdown? So there's two angles to it for Sri Lanka in that respect, and that is mainly from trade perspective on the demand side, because we do export quite a quantum, and especially in terms of apparel and rubber products and things like that. So will demand, for example, ease off? And from the other side, it's on the global financial markets, whether we'll continue to see volatility, or will it mean that the Fed will cut interest rates further, which might then ease our concerns on the borrowing side, or will they look at some kind of other measures? And from the Chinese perspective, I think what's going on, and the numbers coming out also shows a slowdown. So the second quarter of this year, the growth number showed it's slowing to its slowest quarterly growth in 27 years as well. So there's a natural slowdown there. But if it does accelerate, what does that mean? And we are seeing some of the other countries like Vietnam actually benefiting, because now manufacturers are either pulling out of countries like China and maybe looking at supply chains maybe from Vietnam and things like that. So there are a lot of interesting things happening from there as well.
So apart from the ongoing trade tensions between the USA and China, there are other issues, such as recently a new UK Prime Minister was elected, Boris Johnson. So Brexit is expected to take place before the 31st of October. Exactly. So how will Brexit impact Sri Lanka's economy?
So that has been a risk that has, I think, lingered on for the last 2 years. We were supposed to have some kind of resolvement at least by the end of March, but that has been postponed. With the new Prime Minister, I think some of the dynamics have somewhat changed. So we're looking at the likelihood of a no deal looks very much more likely under the current Prime Minister. And that is not good, because that spells out a lot of uncertainty. That would also result in, a lot of estimates put, an employment slowdown, a GDP slowdown, and that as well, Sri Lanka does export close to about $1 billion to the UK. So there could be demand side impact from that. Plus you have also GSP Plus, which Sri Lanka enjoys to the EU as a whole. Now will that continue under the UK with trading bilaterally? What we've seen is there is a commitment to keep some of these trade arrangements like GSP Plus continuing for a year. but that does require secondary legislation coming in. So that needs to also be put in place. But it's only for a year, so we'll have to sort of look at what are the options beyond that year for Sri Lanka. So a bit of concern just purely from on the UK side, but more interesting also from the EU side. What does that impact mean as well? Because it's only 30% of our exports that go to the UK. The remaining goes to the EU. Will they also see demands impact? Will the region, some of those countries slow down? And I mean the overall slowdown as a whole from Brexit plus the trade war which I was describing, the concern is whether, will that result in maybe a further slowdown in global trade and as a result GDP growth as well. So a bit concerning on the overall trade side compared to a few years ago where the story was very much more better.
So does Sri Lanka currently have in place the proper measures to ensure that the adverse impacts of Brexit can be minimized?
So right now, for example, the UK can't really start negotiating things like an FTA or things like that with a country like Sri Lanka, but it only happens once they do finally exit. So I think there has been some sort of discussions and at least trade envoys and things like that, and our missions, Department of Commerce and all, actively looking at the situation. There are other alliances that you can look at through things like the Commonwealth, that block, and see whether that can be reactivated, what kind of things can be done on that. And I think the overall understanding in terms of the impact, so from the apparel side, what does it mean? Because if you do move to a situation where all the tariffs across the board do go to zero, because we enjoy GSP Plus, we will still continue for 12 months, but some of the other countries will also go to zero. So maybe certain tariff lines, our competitors will have a bit of an edge. So I mean, those kind of concerns I think needs to be thought out more, and the overall concerns in terms of the financial services, because we do a lot of financial services with the UK as well as with the EU, how that will sort of impact. So I think those are risks that businesses and the private sector should be thinking about, thinking ahead, and October is right around the corner in that sense.
So now moving on to the local context. Sure. Post the unfortunate attacks in April, how is Sri Lanka's economy doing right now?
So if you look at pre and post, just to, I think, provide a bit of context to our viewers as well. So pre as well, I think the overall concerns on growth was very much imminent. We were also seeing a slowdown in imports that had started from November last year. And we had seen the currency recovering from the steep depreciation that it saw in 2018. So just on those macro indicators, pre and post, they're very much similar. The import slowdown has still continued. Growth, even though the first quarter number was slightly above last year's quarter four number, it's still under 4%, below par, and the potential that we can grow. And the currency, despite the attacks and despite the concerns, has remained relatively stable and is not really depreciated as expected. Now I think that the more concerning issue is on the growth side, is kind of the supply side impacts. Not only tourism, I think that's very well highlighted, but on the retail side, and some of the other transportation and things like that, because of how well tourism is connected to the economy. But I think now things are slowly picking up. It's definitely not what it was 12 months ago, but it has definitely improved. And I think we're seeing, especially on the tourism side, I think on the informal sector side, things are picking up. But I think it'll take a bit more while. Tourist arrivals in July, I think, did pick up to about 115,000 from what it was in June. But it's still down 50%, and I think as we're heading into the season as well, I think we might see that number edge up. So it's slowly, I think, recovering. I think the lifting of the travel advisories, things like that, have really assisted. Now it's, I think, a matter of time before we see some of the other activities just picking up.
And with that, we're going in for a short commercial break. Do stay tuned for more after these commercials. Welcome back to Biz in Focus. Joining us this evening is the Chief Economist at the Ceylon Chamber of Commerce, Shiran Fernando. Now, Shiran, we were speaking of the global tensions and how it may impact Sri Lanka's economy. Now, speaking of the local context, we have several challenges that Sri Lanka is facing right now. And I think the debt stock, the debt burden, it tops the list. So, what is your take on this? I mean, do you think that the debt is not being managed properly?
So there's two ways to sort of look at this sort of situation in terms of the debt side. One is from moving from the high percentage of GDP which it is at to somehow bringing it lower. So that's the the mitigation, the kind of the strategies that we want to adopt. And that requires sort of things like FDI to pick up, and we won't have to be too reliant on the debt stock to sort of push up our borrowings and things like that. And the other side is from the refinancing perspective, which is what we have to keep doing. So this year, as a whole, I think we had about 5.4 billion to raise, and through international sovereign bonds, they were able to raise about 4.4% of it. And the government, I think, recently has said even 70% of this year's debt stock or debt refinancing that's coming up has been sort of been met. So from the cash flow perspective this year, and what has been the trend in the last few years, is the central bank has been able to successfully enter capital markets, raise it, refinance it. But this kind of a scenario, I mean, we can't continue to rely on it. There has to be some kind of a sustainable thing, and that's where the FDI, higher level of FDIs, we attract, under 2% of GDP. Countries like Vietnam consistently get over 5% of GDP. So they don't really have to rely on going out into international capital markets. So it's a bit of making sure that we're not over reliant in the next few years, and also if we are going to borrow, not to go for more short-term debt, look at more long-term debt options. We'll also, in terms of looking at some of the other borrowings, we're now an upper middle-income country as well. So we might not exactly have the same level of freedom that we used to have in terms of some of this borrowing from some of the multilateral agencies. So that will also maybe restrict us a little, but the balance of managing your cash flow and ensuring that we're able to rely less on borrowings to keep us going will be the key, I think.
Apart from the debt burden, Shiran, there's a continuous outflow where foreign held bonds, there's a continuous outflow in that. Why do you think this is continuing?
So what we've seen over the last few years, especially with the US Fed increasing interest rates and money flowing out of emerging markets, Sri Lanka has also been part of that story because we are a frontier market. We get classified in emerging markets. So that stream has continued. This year, I think for most parts of this year, it's been relatively steady compared to last year. The last few weeks, I think, has seen a bit more of an outflow. Partly, I think, because maybe the expectation of interest rates coming lower, foreigners might be, booking profits and leaving. Partly also because of maybe the global tensions and things like that. Overall, when global volatility rises because of trade tensions and things like that, there is investors tend to go to more safe haven assets, so that could be a part of it. So it's a mixture of it. But now it's, I think, at around 138 billion. A few years ago, it was very much more close to even 500 billion. So I think the exposure to the downside is very much now limited. But I think if it does accelerate, especially with the volatility that's going on in global markets, with what's going on the trade side, then there could be a bit more outflows in the next few weeks, and that could impact the rupee. But the stability in the rupee in this year, while it's mainly based on import expenditure also coming down, also has been supported by foreign holdings staying relatively steady to the decline that we saw last year.
So, from your view, what are the future economic vulnerabilities for Sri Lanka?
So the debt side of it needs to be carefully managed, and I think one way that I forgot to mention on the debt side is the growth story, which I think we need to really get that back on track because growth has been slowing down. There are agriculture, I think, has done pretty much better in the last 6 to 8 quarters. Whether that will continue, I think we need to mitigate those vulnerabilities, because maybe we've not got enough rainfall in the last season, and that might have a knock-on impact. On the industry side, we've seen slowdown in certain areas, and on the services also. So once again, instilling of more confidence. It will be a difficult period in the next 6 to 12 months, with elections happening as well, and also what's going on globally as well. So a lot of things for the private sector to weigh up on. But I think if we do get the global growth story, if we do get our local growth story in perspective, then a lot of things could sort of sort itself out. The currency, I think, will continue to be very much sensitive to what goes on externally, and I think the import slowdown may now subside, and maybe heading into the next few months we might see that pick up as well.
Thank you, Shiran. Joining us this evening was the Chief Economist at the Ceylon Chamber of Commerce, Shiran Fernando. Shiran, thank you very much once again for joining us this evening, and do stay tuned for more of the latest business updates after these commercials.
Sri Lanka has the second highest welfare coverage in Asia, albeit with low spending per person, while other forms of social protection are below par, the Asian Development Bank said. The Social Protection Indicator for Asia report said that Sri Lanka has the second highest social assistance, welfare assistance and child, elderly and disability assistance coverage, reaching 54.7% of the program's intended recipients. Welfare expenditure in Sri Lanka had doubled from 0.3% of GDP in 2009 to 0.6% GDP in 2015. In monetary terms, Sri Lanka had spent $47.11 per capita on welfare in 2015. However, Sri Lanka's spending on welfare benefits was low compared to 1.5% of GDP in high-income countries and upper-middle-income countries, and 0.9% of GDP among lower-middle-income countries. Sri Lanka, meanwhile, spent 2.6% of GDP on pension and health insurance programs. Although the country has free healthcare, there is a growing demand for private healthcare and insurance due to a rising income levels and an aging population. Social insurance benefits in Sri Lanka fell 12% between 2009 and 2015, with slightly lower spending on women. In total, Sri Lanka had spent 3.2% of GDP on all forms of social protection expenditure, which was among the lower levels in Asia. Singapore spent 5.3% of GDP, while the Maldives spent 5.6%, China 7.7%, Japan 21.1%, and Vietnam 6.3%. Sri Lanka's spending was even lower than the lower middle-income average, which was 3.9%. A tree planting campaign was launched along the Marine Drive in Colombo by the Sri Lanka Tourism Development Authority. The event marked the launching of the National Sustainable Tourism Certification Scheme together with the Global Sustainable Development Council. The certificate will be awarded to leading hotels in the industry that have complied with global sustainability guidelines.
We've been growing the industry by leaps and bounds, but it is very, very important that we develop the industry in a sustainable manner. Through that, we will be able to create a new value for Sri Lanka tourism brand. And Colombo needs a lot more green, especially in this area. We planted a few trees, and we're going to continue this exercise covering the entire stretch. And through that, we will be able to take a very strong message to the entire country in terms of the importance and requirement to build the tourism industry in a sustainable manner.
Meanwhile, the chairman of the Tourism Promotion Bureau made the following remarks during a media briefing convened in Colombo last week to confirm the cabinet decision granting free on-arrival visas to 45 countries.
We are going out to the rest of the world and saying we are a tourism-friendly country. That vibe will certainly help us. So this is to get the attention back on Sri Lanka.
In May, our numbers went down to 37,000 tourists. So that was a daily average of 1,260. But in June, we managed to record a month-on-month growth of almost 67%. Our numbers went up to 63,000 in June. And in July, with the actual numbers we've recorded up to 25th and the forecast we've done for the rest of the month, the realistic number is going to be 117. It could be slightly more than that. So from June to July, the percentage increase would be over 80%. So by all means, it's a good rate of recovery, and if you compare our rate of recovery with the recoveries that are being made by some of the other destinations following similar calamities, we can all be happy that our progress is much better than the progress the other countries are being able to achieve. We believe at this rate, the year-end figure will be between 1.9 million to 2 million, where the drop will be less than 30%. And with that figure, our revenue loss is estimated to be in the range of 800 million US to 1 billion maximum, given that these numbers are coming at a discounted rate. We all know that many incentives and discounts are being offered to the target audiences in different countries in order to first try and achieve the desired numbers, and then obviously go through the next steps in order to increase the margins, which is our ultimate goal. And there is a decision made by the board of directors to do a very aggressive and attractive tour operator joint promo. Other than that, in India, we have a joint promotion, tripartite one, where Sri Lankan Airlines is chipping in with their contribution, the hoteliers chipping in with their discounts, and then, of course, two operators handling the other aspects to get the numbers from India.
Although the central bank has reduced the rates for deposits maintained in commercial banks, the special interest rate of 15% offered by the government for senior citizens has not been changed, the Finance Ministry said yesterday. The Finance Ministry said in a statement, quote, "There is no truth in the media reports published by various media saying that the 15% special bank interest rate, which has been granted by the government for senior citizens, has been reduced," unquote. The special interest rate of 15% that has been granted for the fixed deposits, which are maintained by senior citizens, was introduced by Budget 2015, and it has been continuing with effect from the 13th of March 2015 without any change.